A wealth tax in New Zealand is a political scam job. Implementing a wealth tax in a small open economy like New Zealand could have ripple effects well beyond the intended goal of raising revenue. Here are some of the biggest potential risks. Capital flight and talent drain. 1. High net worth individuals are highly likely to relocate their assets and/or themselves to jurisdictions without such taxes, reducing New Zealand's domestic tax base. 2. Many skilled entrepreneurs and associated investors will probably choose to base their new ventures offshore, impacting innovation and job creation. Investment disincentives. 1. A wealth tax applies regardless of whether assets generate income, which can discourage long-term investment in businesses, property, or local markets. 2. Some asset classes, like startup equity or farms, may be disproportionately affected if exemptions aren't carefully designed. Liquidity problems for asset-rich, cash-poor taxpayers. People with high value but illiquid assets, example, people with land or family businesses, may well have to sell part of those assets just to pay the tax. This can create pressure on small business owners or farmers, potentially leading to unwanted sales or consolidation. Administrative and valuation challenges. Accurately valuing diverse assets, especially privately held businesses, art, or intellectual property, can be complex and costly. Global competitiveness. Introducing a wealth tax without aligning with international norms could make the country less attractive for foreign investment. Political and policy volatility. 1. Wealth taxes in most other countries have mainly been repealed due to political pushback, administrative burdens, or lower than expected revenue. 2. Frequent changes in tax policy can undermine investor confidence and long-term planning, much like the Labour-Greens alliance oil and gas ban shambles. Summary. The idea that taking money from the wealthy and redistributing the funds to the poor in order to meet a given political ideology is fraught with financial danger for everyday, hard-working Kiwis. One need only look at the political parties in New Zealand who are pushing hard for a wealth tax, namely the Labour, Greens and Te Pāti Maori parties, and you don't need to be a rocket scientist to foresee the ruin and hardship that will be created for regular people, not for the wealthy, who will be the least affected. There is an obvious reason that the concept of a wealth tax must fail in New Zealand. The people who are wealthy are not stupid, so will either leave or will restructure their assets, and therefore ultimately the country will lose. The New Zealand Green Party also know this, but they rely heavily on lower IQ voters who believe the wealth tax garbage spewed at them, so they will vote for them. And that fact is how the Greens scam the public. They come up with this nonsense to win votes, followed by a big fat taxpayer-funded salary and expense package for several years if they get elected back into Parliament as an MP again. The Green Party knows fine and well that their tax budget will never be implemented in New Zealand. The idea of a wealth tax for Kiwis is nothing but a political scam. Thank you for listening. WhangāreiTim.